And joining me on the podcast and live on video is Vadim Alexandre, Head of Healthcare at SP Angel. You're right, Vadim?
How are you doing, Justin?
Yeah, we're not too good. Today's a really odd market. I look at indices and I'm thinking it's not really that bad out there. I mean, I don't understand what's going on. I'm feeling like it's got a feeling about it. I don't know if it was a couple of years back. This is so they are all down, the indices, but not hugely down. AIM all-share is only down 0.12%. But do you remember, I don't know when it was, I lost track of time, but 2 or 3 years ago, I think it was, when a London listed, I think, fund manager went to the wall. And of course, they have to sort of, get rid of the stocks, and it has a knock-on effect there because other stocks get sold, and other brokers have to sell or take on. So and everything went red for like about 2 or 3 days.
Yeah.
And I'm sensing that now is a liquidity issue where no one wants to take these shares off this broker or this fund manager, and it feels like that at the moment. I own about sort of I think 18 stocks. I got 4 up, one stay, and one non-mover, and the rest are down. And the last few weeks, it hasn't been like that. It's been the opposite. Maybe I'm just used to the market rising now, and but it seems a liquidity issue. I don't know. Part of me is thinking, what is this? Is it either a fund's gone bankrupt, or I don't know if you've seen that the latest sanctions America's conducted on Russia. They've literally basically stopped them trading the stock exchange, Moscow Stock Exchange, with dollars and euros and stuff. And they've imposed, I think, 1,200 financial institutions were banned, but they've gone to 3,000 institutions and people. So is that having a knock-on effect, the liquidity in the market? It can't be. It can't be linked to AIM, surely. So I don't know. I'm just thinking, I don't understand what the liquidity problem is. I'm looking around, and everything, especially nanocaps, are taking a hammering. Any ideas, Vadim?
It's been a bit, I agree, it's been a bit of a wobbly week, but we kind of, like you say, breaking sentiment. The sentiment was positive for a while. I don't know. I think it's maybe just a, what do they call that? A consolidation. We've had a, good run in the AIM share, and then, the last few days are probably a consolidation. But quite frankly, like, look, there you go. There's your bull market consolidation. That's classic what happens. It reverts to the mean. Reverts to the blue line there, which is what's the 50-day moving average?
It's 50-day pretty much. If you look at the last time it did that, it rallied strongly from, like I said, from October to January, and above 200-day, came back to 50-day pretty much.
And then it bounced along the line. You see what I mean? It came under it a little bit, but you see that big descent, the one you were talking about, where it crossed the 200-day.
This one here.
A bit further, or a bit further back, the other way. Right there. So there's a big rally, crosses the 50-day average, crosses the 200-day average. Then that was the signal to sell, and then it bounced right there on the 50-day as before, right before. So basically, it bounces when it reverts back to the 50. So we may be nearing that bounce when it touches the blue line again.
Well, to be fair, it did. It's not really fallen. It's had quite a few days for coming down here, but my stock's doing well even in this period here. And also, today now the AIM is flat. There's not big falls, just more red than. And I've looked at the liquidity. It's very low volume as well. So it's not like it's almost like the market makers are doing something because there's no volume there at all. And so it's not like big selling going on. So I don't know what's going on. But anyway, by the way, a big faller is. And we discussed this previously, recently on, why do companies announce fundraisers before they're doing one? And Destiny Pharma AGM statement. Let me bring it up. Actually, Destiny in the AGM. Sir Nigel Rudd, I think it was. Was it reports annual statement? There we are. Let me just pump this up. And he did say. Sir Nigel Rudd said. XF73 has enormous market potential and can make a huge difference, all that stuff. And they said, given our current, while licensing activities, however, one of those words, or while licensing activities continue, given our current cash runway, feedback from potential partners, and let's to evaluate a range of strategic options. A review of these options has continued since the full year results. We intend to provide an update in the coming months. So the fact that he's mentioned the cash runway, and other partners are saying you maybe need more of a cash runway, that suggests. Anyway, Italian downturn, look at that. It went down 30% on that announcement yesterday. And now it's down another 14% a day, 15%. So that's a big drop, isn't it, on that?
Yeah. I mean,
it's horrible.
When we were talking about this back in the day, it was like a 30p stock that went to 75, I think, roughly, right?
Yeah.
And now we're talking 30%
Yeah.
down on a 20, so it's not 11p stock, right? Or something
Yeah.
like
Yeah.
that.
Yeah. 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 Well,
Yeah,
it's 10p. Yeah.
yeah,
It's
yeah,
10 pence. What's the market cap here? In fact, this was yesterday, but the market cap is now 11 million. So it's almost like if once this is a potential candidate, like you said before, once a company gets a fundraise at the way, there'll be a bit of a
yeah,
churn for a few weeks afterwards.
yeah,
But once, because I talk about hope, high potential stock, these blue sky stocks, they're all about story, pretty much potential, you know. But when the funding becomes a story, that's not
yeah,
good. So
yeah.
once they get the funding, then of course you'll have a bit of churn, people selling and placing, whatever, selling quickly for a quick profit. But it'll bounce along but this could then be, one to look out for because it has the potential to rally. When you
Yeah.
see that those kind of rallies, it can do that again. But it's interesting to see now. The trouble is at 11 million, how much can they raise? That's the thing, isn't it?
I mean, I hate to say it, these things, a lot of these stocks are going into kind of wipeout territory. So, Polarean being the ultimate example, recent complete wipeout of shareholders. Well, these, as you start nearing those lows, and you need cash, it just becomes a vicious downward spiral. And
Yeah. Because
yeah,
I mean, unless you get special sort of sort of well-heeled investor who doesn't mind chucking loads of money into it. Generally, you're limited on you to how much you can raise, and then normally it's a percentage of the shares in issue, pretty much, or the market cap. So,
yeah,
if you're talking about like a 10 million pound company, you're 10% shares. That's £1 million you can raise. I mean, maybe it
yeah,
raise more than that, but I mean, you are limited by the size. And I do say this up. I like macro caps, and I say that sub 100 million market cap. But sometimes you can get to the stage where they become, suboptimal for scale because if they're losing money and they're so small, they can't raise enough money to get enough cash runway, to get the story to flourish. So
yeah.
it's that downward spiral, isn't it?
Exactly. That's the problem when they become subscale. It just depends, it all depends on the cash position of the company. I completely agree. And it's
Yeah.
kind of what the sector is suffering from the most right now is because it's a cash hungry sector of companies that burn cash. So you might imagine, okay, these companies, what happens is they go preclinical, late stage preclinical, clinical stage, which means they start testing patients, which is then a phase 1 trial, phase 2, phase 3 trials, and then approvals and commercial stage products. All of those have significant value inflection points, so they create value along the way. The question is, how do you get from one to the other, right? That's the difficulty. So you need cash to be able to create that value, and a
Yeah.
lot of them get stuck in between,
Yeah.
run out of cash in between. So here's a case in point right now. Another one we mentioned, Polarean, and there are many others. This is what's plaguing the sector right now is in a down market when you can't raise capital because investment just isn't forthcoming. Companies get caught out.
And and like I said, it extinguishes the story. The
Yeah,
story almost ceases to be the story. The funding becomes the story,
that's right.
and of course, the story can't become a story until you get the funding. So it's a catch-22, pretty much.
Correct.
In fact, you know what? I had an alert on Avacta hitting the 52-week low. I think it was yesterday. And that's even though they raise money but that is just bumping on the bottom there. I think
The
it's
raise was that decline there. You see what I mean?
yeah,
It
yeah,
went
that's right. No,
from
that's it. Yes, that's it.
yeah,
Yes,
it went
there.
from 110 during the fundraise, and then the fundraising was announced at 50p.
Yeah, yeah, and so it's that worry going forward. I think a lot of this, of course, is maybe. I mean, I think yesterday the Fed had meeting yesterday, and they were saying they did say that they don't see as many interest rate reductions as people expect this year. They maybe even one, and maybe even smaller than people think. So
Yeah,
that's not helping, I suppose, because of course, as long as the cost of capital is expensive, and people can put their money in, a risk-free saving account to get 4 or 5%.
yeah.
Bonds 6%. So why would they invest in high volatile, high risky stocks and have the chance of it going down by 40, 50%? It doesn't
Yeah.
make sense until that sort of until people start seeing their savings accounts giving them less and less. They're not going to be tempted into putting their money elsewhere, are they? Really?
Nope.
So
We're still firmly in a risk-off environment. I mean, there
yeah,
was there was a nice little, June was okay in the beginning, at the very beginning, and then as you said, in the last week or so, it's kind of crumbled again. You know,
Yeah.
there are little rays of hope in terms of risk returning into capital markets, but they kind of get smothered and, you know, back to square one. And a lot of it, as you say, that what smothers it is the macro, and the main macro kind of issue is the interest rates not coming down, and that's just it. That's where we are. Yeah.
Yeah. Okay. So, what you talk about a stock? Which stock was it?
Yeah,
Biometrics,
well,
is it?
just in terms of news flow this week, there was this morning actually, Bivictrix. This is a company that I own. I like
Bivictrix,
it.
is it? I'll just remember that. We'll stick it there.
It's a
BX,
BVX. There it is.
BVX. Okay. Yeah. Yeah.
BVX. There you go.
Yeah.
There you go. Yeah. So
Oh,
this
hang
is
on a sec. Look at that. That's starting to. It's almost to that.
it's starting
That's
to, yeah.
above the
This is
200-day moving average. There, it hasn't done that since.
for a long time. Exactly.
No, it hasn't. I mean, do you know what? It hasn't done it since on an uptrend. I mean, it's on a downtrend. Yeah, it spiked up. Why did it do that? It went up by 700% on
No,
May
no, that
2020.
no, that's a mistake. That's not what happened. That didn't happen.
Really? Oh, wow.
What
So
what was the price? What was the price you saw there?
this is 2020 BVC, is it?
No, it listed in 2021. It listed in
BV.
2021.
Oh, okay. That's why then. It's obviously
No,
because
one more down, not
yeah.
Biotech. That one. Yeah, there you go. That one.
So okay.
Yeah.
So this is what the compelling. So it must be that's the old stock, stock share price for whatever it
Yeah,
was.
maybe that's
Yeah.
what it was.
So what are they announcing?
Yeah, basically, look, I like this company. This one predominantly because of the technology. I mean,
Oh, sorry, there we are. So there's a chart there. It listed there on 11th of August, I think. That's where, or around about there, is it? 2021. I think
yeah,
that's
when they listed. That's when they
yeah,
listed. So
yeah,
I don't know what the history prior to that was. I
yeah,
don't.
yeah,
It wasn't. Maybe it was just sometimes tickers are used by somebody else before.
yeah,
You know
yeah,
what I mean?
yeah, yeah,
There's
yeah.
a possibility of that. I'll give you the share price history. Basically, they listed at 20p in 2021, which was the top of the market in biotech,
Yeah,
and now they're about 12p. You know,
yeah.
and the reality is nothing really negative has happened. It's only progressed things, but the whole market's dragged them down. But comparatively speaking, they're not actually like performing as badly share price wise as many peers who are down 95, 99%. So they're down whatever that is, 40% over a 3-year period, but starting to recover now more recently. And this is just yet another announcement. You know, they've been generating good data. It's probably worth talking about what they do.
Yeah, what do they do? Yeah, yeah,
Yeah.
yeah.
So what they're, you know, everybody's heard of antibodies as therapies. What the new thing that's been more popular recently is attaching a payload to an antibody. So the antibody allows you to focus on a target with a high degree of specificity. So being very targeted towards whatever target you're aiming for. That's what antibodies brought to the picture about 30 years ago, and they're very effective. They hit cancer targets with a high degree of precision, and they take them out. What more recently we've been doing is attaching a payload to that antibody. So it hits the target, but it hits it 10,000 times, you know, millions of times harder, because you're either attaching, more often than not, you're attaching a chemotherapeutic agent. So you're able then to kill the cancer cell with precision and with a far more lethal payload. And that's what they're in the area of. They're in the area of what are known as ADCs. They're called antibody drug conjugates. Now, this field has kind of exploded over the last 5 years. There's been about 10 or 15 approvals. And now everyone is saying if you're going to develop an antibody towards a target, a therapeutic target, you might as well attach a drug, so a payload. So ADCs are becoming the norm now for any antibody treatment. It's becoming kind of standard to make ADCs rather than just antibodies. So they're in this area. So it's a very hot area. There's multiple deals going on in the space. A lot of pharma didn't expect this field to take off so quickly and got caught off guard and needed to then buy in ADC programs. Okay, so they're in the right space. What they're doing though is that is truly unique, and I like this the most about them, is they're targeting 2 antigens with their antibody. So instead of targeting one thing on a cancer cell, they're targeting 2 things that are cancer specific, which allows you to become even more specific to cancer cells. And that's essentially what they're doing. The area that they're covering for their first asset is AML, which is leukemia, basically. It's the largest leukemia condition. And then they have a second program in ovarian cancer and then multiple other assets in the pipeline. But the key is this.
Go on.
Yeah, the key is this ability to hit two antigens on the, say, leukemia, on the cancerous cell, right? And here, what this announcement is about is that they've done some toxicity studies, and it indeed is corroborating their story that their asset that they're developing is showing a better toxicity profile, or a strong toxicity, low toxicity profile, which is exactly what you want to see in your toxicity studies, which makes for their preclinical package makes the package a lot stronger. And this is the result today. It's kind of heavy, in terms of it's scientifically interesting, but it's also commercially. So when you read it, it's kind of heavy on the science, if you like, for someone who's reading this for the first time. But as part of the story, what's important is that what they're trying to show is that their product has a good safety profile compared to existing products in the market, and this is what this science here is showing. That it's highly specific, and not toxic.
Yeah. So but essentially, this is, like I said, preclinical. What that means is, it's not in humans yet. Been testing in humans. Been testing some other kind of animal, whatever it is. But they say it compares, they say, favorably to other FDA-approved ADCs. So that's good. So no toxicity. So yeah. So I assume now what they're doing now with this, will they be taking this in the clinic then now, or what?
Yeah, so I mean, this company, the ambition ultimately is to take this into phase 1 trials, and then ultimately, this won't happen in a day or two. This is, the ambition is to get them into clinical trials, test it in patients, and then start to demonstrate efficacy in patients. Now, if they do that, because AML is such an unmet medical need, and other drugs have been approved on, you don't need to go through phase 1, 2, 3 trials. You just need to show, much like another company that we've covered here, Hemogenyx, also in AML, if you show any kind of efficacy signal in your first phase 1 trial, then you're probably going to get some form of a fast tracking to an approval. And then you can do the other trials while it's in the market. Certainly there are other drugs that have been approved on something like a couple of hundred patients. So this isn't something that has to go through 10 years of clinical testing.
Yeah, interesting. What's that with the charts? It's picking up. Like I
Yeah.
said, it's come down here for, it hasn't hit the 200-day, and for ages like that, it's bouncing off ahead on the 200-day.
Yeah.
And now it seems like if it closes here, it'll be above it, which is, quite a bullish sign. And next, you'd expect the 50-day to cross up over the 200-day,
Yeah.
be a golden cross. But that's a good sign. But
I think ultimately with this stock is that its
what is the market? Sorry,
valuation.
what the market cap here? Is it 10
It's
million?
10
Is that
million.
right?
Exactly.
Okay.
It's a 10 million market cap business, that, in my opinion, could be quickly, a lot more.
Yeah.
That's the essence. Unlike some of the other stocks we've talked about, like the Avactas of this world, much as I like the technology, they're 150 million market cap businesses. They are in clinic. It's true. They're more advanced. But that there is a big difference between 10 and 150. So you can see how a 10 million market cap business can become a 30 million market cap business, which is not a bad return.
Yeah, no, absolutely. Yeah. I mean, it's anything I've said before, with these sort of blue sky stocks, hope high potential stocks. I mean, I think it's sub 20 million when you have a huge potential, because that means you don't have to get a commercialization. Even a re-rating on some of their trials
Yeah,
would mean that you double, treble, quadruple your money pretty much.
exactly.
But I said, where's you mentioned Hemogenyx there? What are they up to at the moment? They have any news out? Are they recently or?
So Hemogenyx, the ambition is to get into clinic. They raised money, I think, in March or late February. And that was enough to get them to commence clinical trials. Now that takes time. They need to, file with the clinical trial sites, and get that up and running. And, I think they, at the time, said the ambition was it would be good if they got something by the end of the summer, but that's quite ambitious still. So, I would hope to see the next big news, the big news from Hemogenyx would be first patient treated.
No, you can tell we're in this, bear market where it's hard to raise funds, because I suspect in the bull market, this company were rallied on some of the stuff it's released, and
Yeah.
It's not happening now. People just worried about risking money. They're seeing rallies not working in these loss-making stocks, so they're not putting money in. I mean, look at that. In one day, this went up 256% at one point. But so
To me,
it's not.
that is the story of biotech. When it's working, stocks genuinely spike because they re-rate. Like we just said, a 10 million market cap business can become a 100 million market cap business. It's entirely possible in the biotech sector. But in this market, it's very difficult because they're not.
Exactly. It's linked to funding, isn't it? I mean, once funding becomes easier and there's more access to capital, then I think these stocks will start to rally. But it's that's not going to be tomorrow. Even if we start reducing interest rates in this month, it's going to be a quarter of 1%. That's not going to make a blind bit of difference, really. So
exactly.
And like I say, unless we have really bad economic figures, and inflation drops through and there's worry of deflation, I can't see central banks ratcheting down interest rates very quickly. So,
No, absolutely. No, look, without question, this isn't going to be fixed in a quarter or anything like that. The one thing that does ultimately, so if you look at the immediate picture, it's a down market. You look in the 3-month picture, it's probably going to still be bouncing around. Maybe might start breaking through. We are at the into a 3-year downturn in biotech. So eventually these things turn. And the question, people ask me, because, this is how people feel in the depths of a down market. They say, well, why would things turn? What is it that turns things ultimately in this market? Like, what is yes, you can talk about a quarter point, 2/4 point interest rate. Is that going to transform the biotech market? No, you just said so. You're absolutely correct. But fundamentally, what changes these sectors and why they keep coming back and why they're so volatile and cyclical is that the upside is driven by innovation. So all of these innovation sectors, I'll give you the ultimate example of a drug we all now know, which is Wegovy, the weight loss drug. That, Ozempic and Wegovy are the two. They've created a class of drugs now that's going to be the first $1 trillion class of drugs. So, you ask yourself, well, where it's value creation of that enormous, I mean, that's enormous value creation. They've actually, there was Novo Nordisk, a Danish company that, came up with the first one, these two, and it's impacting their GDP. That's how powerful, that is how big this asset class is of these drugs. So, as innovation continues and as things accelerate in terms of, because there isn't just the current pace of innovation, the pace of innovation itself is accelerating, right? With AI, with all these things, drug development is accelerating. That's what drives these sectors to come back. It'll inevitably come back. It's just a question of how many more punishing months, hopefully not years, we have to live through. We've done 36 so far, 36 months of downturn. Can we do a few more months? I think it'll have to be the case. Will it be a few more years? I doubt it. I think it'll be somewhere between those two.
Yeah, no, Novo Nordisk and Wegovy, unbelievable story. Because when you think of it, they're from Scandinavia, but where they launch? So we got a drug that's help people lose weight. Where do you want to launch? Well, you're a big population with a lot of obese people. America, and literally they can't produce it. The guy been asked, "Are you intending to, supply other markets?" They said, "At the moment, we can't." He's like, "We are up." It's like having a product you literally can't produce enough of. Is people queuing on the block non-stop, 24 hours a day. They want this drug to lose weight the easy way, pretty much. And let's be honest, how many people in the world would say no to this drug? It helps you lose weight. It's like,
and that's just the beginning. They're saying these are a real miracle class of drugs because it's not just weight. It's weight loss initially, and that's big enough. That's
secondary.
But the secondary impacts are cardiovascular disease reductions and major reductions in type 2 diabetes. And now
replacements, all that stuff. I know.
And now cancer. Now they're saying the ASCO, which is the American Society of Clinical Oncology, the meeting. It's a once a year mega conference in Chicago. It's the biggest oncology conference in the world. And there was a data presented that came out of that conference on these drugs, on Ozempic and Wegovy, that showed a 20% reduction on whatever it is, the top 10 cancer killers. So, you know, again,
Wow.
these
Yeah,
weight
yeah.
loss
It's
drugs.
impacting everything. You know, it's nuts,
Exactly.
isn't it?
But, you know, a lot of that is just weight reduction, right? Because
Yeah.
obesity is linked to various cancers and also to cardiovascular disease and type 2 diabetes. So you can't necessarily untangle it that simply. And, you know, we don't know for sure if it isn't just a weight reduction. It might be more, but surely without, you know, there is this class of drugs is transforming, you know. But back to our, you know, my first point, which is it's drugs like this, it's innovation like this that drives the sector ultimately. So that's why the sector comes back. It always ends up coming back because innovation eventually kicks in and people see the sheer value creation of these solutions.
It's an amazing story. I've heard some reports of people who've been on these drugs and initially think, oh, brilliant, you know, eat what we want. And it's not that. Is it? People take them, they lose their appetite completely. And when they eat something, it tastes like cardboard, whatever. It's just not an appetite. I heard this lady who's like, she got a family of like 5. She don't even feel like cooking for the family. But the food doesn't, I don't like it. So it's like, oh, so it's not just enjoying food and having this pill afterwards. You just don't eat, you know. And so even that, there was one point in the story saying it's going to affect food sales. And all that sense, you know, because if lots of people are on it, they're just going to buy less food. And it's amazing. Marvelous stuff. Thanks for that, Vadim. And we'll speak to you next week.
Excellent. Thanks, Justin.